A lot of things are happening, including the Saudi budget. But before we get to that, I just want to ask you about the big news of the morning, the geopolitical developments and news that a ceasefire has been announced between Lebanon's Hezbollah and Israel. What is your take on what this means for the region in terms of potential geopolitical stability moving forwards?
Thank you, Joumanna. I'll refer back to our clear position on this. In general, the kingdom's position is for creating room for more dialogue, more discussion, and de-escalation. So we see this as a good step in the right direction, and we want to see more steps towards dialogue for a foundation for peace and prosperity region-wide.
Turning to the budget, yesterday Saudi Arabia released their budget showing forecasting a 101 billion riyals deficit, or around 2.3% of GDP deficit for next year, also outlining plans to trim spending in 2025. To what extent does this budget reflect some of the reprioritization of spending that is taking place within the kingdom right now?
So it's important to keep in mind that this budget is a roadmap for long-term economic leadership. We can't transform in one budget cycle or two. This is a long-term journey that requires consistent work. In the past, when we started, we were trying to get our finances and financial management in order, so we focused on zero deficit. After that, we realized that a deficit by design in a stable region between 2 and 3% is good for investing in the right economic sectors that we want to bring forward. This is about quality, non-oil economic growth.
Well, I noticed that spending in 2024 actually came in 7.5% higher than what you had originally anticipated. What guardrails are in place to ensure that spending doesn't overshoot once again in 2025?
We're very conservative in our estimates for revenues, so that helps us. We are also, year after year, testing with more fiscal rules to help keep our spending within specific ranges. However, there's always opportunities for us to advance progress that we're seeing in non-oil sectors or priority sectors that are seeing more growth than planned. And decisions were made in the past, not just this year, but before, to double down on some of these sectors to improve and amplify the impact, but also to build the foundation for a more sustainable, more vibrant, more diversified economic growth story moving forward.
And on that point about diversification, I thought it was noteworthy that His Excellency, the Finance Minister, Mr. Jadaan, pointed out that 52% of the economy now comes from non-oil sources. To what extent do you think that provides the Saudi Arabian economy with a buffer to what's going on with oil prices? Because there has been quite a lot of downward pressure on the price of oil.
So that's the objective of Vision 2030, minimizing the impact of one commodity price on our ability to grow the economy. Traditionally, our government spend relied on oil revenues. Our economy relied on government spend. Both of these relationships today are relying less on each other. So today, for the first time, we passed in 2023 the 50% mark for non-oil activities as a percentage of total real GDP. Today, that reached 52. We expect this to go higher and higher. It started at 47 before the vision. Even if it's a few percentage points, these represent a structural shift that takes decades sometimes to achieve. So while we're excited about this achievement, we don't see it as a milestone that we'll over-celebrate. It's a baseline. It's today's baseline, yesterday's achievement. We want to focus on how the growth can be of higher quality, representing more private sector dynamism, more opportunities for highly valued jobs for people in Saudi Arabia, and more non-oil exports.
Speaking about growth, again, I think it's interesting that the outlook for growth has actually been revised upwards for next year. You're now seeing a growth of 4.6% in 2025. That would constitute an increase of 0.8% that is anticipated to be the number for this year. Where is that optimism coming from? Because again, if you look around the world, there are lots of negative drivers right now. And not least, the expectation that we have a Trump administration coming back to the White House who could be looking to impose tariffs.
So we have to continue the journey that we started. It's a long-term journey that requires consistent delivery. The sectors that were started from nowhere around the world is seeing the birth of sectors with this serious approach that the kingdom is taking. Nowhere around the world are current sectors, incumbents, seeing more innovation, more FDI, more ability to turn that knowledge accumulation, especially in healthcare, defense manufacturing, energy, into drivers of competitiveness moving forward. We've seen 4.6 is total GDP. Part of that is related to, in 2025, part of that is related to production coming back online. But also our non-oil growth for this year, we expect it to be 3.9. For next year, we expect it to be 4.8. And we've been averaging 4 to 6. The last 3 years, we're around 6%. We've been averaging 4 to 6% for non-oil activities growth, which is the key driver. If you double click on these activities, we want to see signs of higher quality activities that are coming here to stay, such as tourism, manufacturing. Our PMI has been above 50 for the last 4 years. We have over 300 factories being activated or operationalized this year and over 400 licenses for more factories. Whatever you look, whatever sector, you'll see a growth story that's exciting and that's building on government push, but more importantly, growing dynamism from the private sector.
Turning back to what you were saying about the deficit, one other recent development is that the take-up of public debt to GDP has started to rise. It's still low levels. We're still talking about sub 30% here. But my question is, how much fiscal deterioration, so to speak, albeit it's coming from strong levels, is the kingdom willing to tolerate in light of some of the spending targets that have been set around Saudi 2030 vision?
We're still one of the lowest, maybe the second lowest, if I recall correctly, compared to our G20 peers. There's room for us to raise debt more. The important thing is what you do with that debt, where you will spend it, what kind of return that will give in terms of further restructuring the economy. And our view is that the more diversified the economy, the more we can raise in terms of debt, because the name of the game at the end is how can we create more sources of growth that flow into the economy and that the private sector can build on moving forward.
Last week, Moody's upgraded Saudi's sovereign debt rating. Is it your expectation that other credit agencies are going to follow suit?
So the Ministry of Finance and the National Debt Management Center lead the discussion. We're always engaging with the credit rating agencies and sharing with them our plans very transparently. We're talking about everything, the changes, the double downs, the reinvestments. We're optimistic. That's all I'll say.
Okay, well, given your optimism, let me just round up the discussion with perhaps a dose of reality. What is your biggest concern for the outlook going into 2025? Where would you say the biggest downside risks are emanating from?
So we're more integrated in the global economy. We have a stronger voice as an economy because since Vision 2030, we understand better what different sectors, what different policy questions need. We're engaging with our peers bilaterally, but also multilaterally to share our knowledge and lessons learned and data and some challenges we had and learn from them. Our concern is that this year and next year, if there is a concern, witness a lot of changes in terms of economic policy, especially when it comes to trade. We're still optimistic, but we're paying closer attention to how that will affect the global economy. Hyperinflation, hyperglobalization is over. There's a new wave of globalization that's happening that requires more collaboration, more dialogue, more discussion, and truly knowing what is good for our economy, what is good for the global economy, and continuing that dialogue, building on stronger institutions day in and day out. That's something we don't talk about, but we're very much busy with, and strong partnerships with our peers.